From the floor of the CME, this is Chris Robinson with your trade update here today, Tuesday. Well, what are we looking at? We continue to have new highs or approaching new highs in the equity markets, but I'm going to focus on grains here. The grains, we had about a 2 or 3 day rally off the lows from last week. That's all gone south. You've got corn, wheat, and beans lower here today, basically on the weather. We've got Dees corn has got a gap above which it was not able to fill. The gap goes back to the 18th. We missed it by a quarter cent. Mark didn't like that. We're lower here today. If Dees corn takes out the 64 and a quarter level, that opens up potentially a new round of selling. The funds are still long about 80,000 contracts of corn. Flash back to about 2 months ago, 2.5 months ago, they were long 250,000 contracts. So that's number one. The corn looks poised to possibly roll over and make new lows. Again, all on weather. As far as the soybeans, the funds are now short about 1,500 contracts of beans. They have been long as much as 160,000 contracts about a month and a half ago. So they flipped now and they're now short beans. We had a pretty good 50-cent bounce off the recent lows, the 4-year low. We went down to within a penny. If you look at November beans, new crop beans, they got down to within a penny of the contract low at 10.55. The contract low is 10.54. You had a lot of people get excited because we had some good exports, but at the end of the day, if you're China or a country that needs to constantly be worried about feeding their people or feeding their hogs, you're always going to be an importer. So it's not surprising that they stepped in on 4-year lows and bought some grain. We're still looking at what is penciling out to be a very large crop if we don't get some sort of weather issue. The corn is pretty much made right now. Beans will be made in August, so we're coming into the critical point for types of yields we'll get for beans. But at the end of the day, it's supply and demand. That's one law that nobody can really fight against over the long term. So if we don't hold these levels here in the beans, it opens up the door to another move lower, possibly, some analysts will talk about another $1.30. And then the wheat. The wheat was struggling to try and make a rally. We had about a 25-30 cent rally over the previous 3 or 4 trading days. That's also fallen out of bed here. You've got September Chicago wheat making a new low for the move. It's poised to take a look down at possibly the $5 level. Again, but we had a 23-cent rally. Today's low, 5.19, a new low for the move. That opens up the door, obviously, to that nice round target of $5 Chicago September wheat. That's really about it. Those are the trades you want to keep looking at. Resist the temptation to try and pick the bottom in these markets because the 3 and 4 cent 4-day rallies can be very short-lived. There's an old expression, it's dangerous. It's trying to catch a falling knife if you're trying to catch the bottom in the grains. One last thing before I hop. Take a look at cattle. The cattle is making new contract highs. Take a look at a chart of cattle, feeder cattle and fat cattle. That's almost a surrogate for the stock market. We're heading into Friday's unemployment number. That could get some gyrations in the stock market. Some traders look at trying to put spreads on, kind of intermarket spreads. And if you look, there's a very good correlation between the stock market and the cattle. Might be something you want to look at as far as trade opportunities. If you're looking for some trade ideas and you want to work with somebody with experience, I've been in the business now for closing in on 25, 26 years. So don't hesitate to give me a call. From the floor of the CME, this is Chris Robinson. Have a great day.